Well, the jobs report came in strong. Unemployment at 4.7%, and that's not particularly surprising given the tone of the economy these past few months. Markets have spent the last few weeks digesting gains. The leaders have been lackluster at best, but I don't mean that in a negative way. I just mean that there's been no meaningful moves in either direction. It's been hard to make much headway. But that said, there are some names that are setting up. We have, of course, the ephemeral, not the ephemeral, but the permanent FANG stocks. Who knows how long they will remain permanent, but they are the ones like Amazon and Netflix. They've been trading constructively in tight, quiet trading ranges as the market has been consolidating its gains. And then you got other stocks like Google and Facebook that have been drifting higher. Nothing real exciting, but the action is more or less okay. We have some other names on the focus list that have been also acting well. For instance, we've got CC, the chemical company, and that traded close to its 20-day line. In fact, I think it might have just about touched it today or yesterday, and so now it's bouncing off that. The volume rate has been low, just like the prior days. So these volume dry-ups, of course, we've mentioned, are constructive, and they also allow for a low-risk entry point. Then you've got stock like BABA, B-A-B-A. That one has been getting tighter as it continues to trade sideways. You can see it more easily on a weekly chart. In fact, it's a weekly chart. You can see that it's about as tight as it's been since it went public back in 2014. And a number of these Chinese names have been doing, they've been acting pretty well overall. So I think that bodes well for stocks like BABA that seem to be like a coil. It looks like the longer this sideways move continues, as long as it continues to trade in a tight way, that coil will spring at some point. So,
hey, Dr. K, I have to take some. I have to differ a little bit here. I think that Chinese names like Weibo are not acting well, and that's actually on our short sale list right now. We put a report out on that one. Momo may have had a sort of a climactic move here, and it's kind of odd because you don't see a climactic move coming out of a base, but you have to wonder whether in this market something like that is possible. But that definitely looked climactic, and the ensuing action yesterday seems indicative of heavy selling. So my one concern with BABA is that it shows the strength, but it goes nowhere. And if you look at the pattern, it's in this big structure near the highs. You have this cup with handle. It's formed since, I guess, early October on the weekly chart. But you can see that the handle is actually, instead of drifting down, it's wedging higher. And there's some stalling along the 104 level. So I would be cautionary. I don't think this thing is coiling. It may be coiling to go to the downside as much as it might be going to the upside. And if some of these other names, like look at NetEase, for example, this is almost starting to look like a little fractal head and shoulders, and you can see that the right side of the fractal head and shoulder, they'll tend to have similar characteristics, but you can see this break off the peak occurs on heavy volume. So, I think there's as much reason to be cautious here as trying to paint a bullish picture of the China names, because the bottom line is these things have had great moves, and we had Momo on early, and they've had great moves off of the turns, and we know off the lows of the bases, and we know that in this market, that's where the best moves happen. And by the time something is breaking out, it's just a little bit too obvious at that point. So I'm a little cautious here, and I think why doesn't a name like NetEase, if it's so hot, you get no continuation from the viable gap up. BABA, the same thing. You had a viable gap up, but no continuation, and it just seems like there isn't a lot of spunk in here. And to me, it's not clear. I would be watching for breakdowns in these things. I actually thought NetEase is a short at the 10-day. On Wednesday. Obviously, Weibo is a short, and Momo was a sell, and maybe it could be turning into a short here. I don't know. We'll see if it holds above this gap. But, I'd be watching these very carefully, because I think if a lot of these names start to come apart, then it's telling you something about the market. And in the meantime, I'm not so sanguine about the most stocks in this market. Look at a name like Caterpillar has broken down.
Can I address your points before you
Yeah,
continue?
go ahead.
Go on to something else. I think that this is very illustrative to our listeners as to why one should never get married to one side or the other. We've constantly practically preached that, you got to remain fluid. Now, I think that both arguments, my argument and Gil's argument, hold up. And that's very illustrative of being watchful on both sides of the market. I do believe that if the markets can continue higher, I mean, that's, of course, up to the markets, but if we continue this uptrend, I do believe that there is constructive action being witnessed in some of these Chinese names. And I do believe they will move higher along with the market. However, if we start to get some sort of correction, and I think the market's probably due for one, but trying to predict a correction is kind of pointless because you'll know it on the day. You'll know it as long as you continue to pay close attention to your stocks. Watch your stocks, and they're going to tell you everything you need to know, rather than trying to make a prediction, a few days out or a week out or a month out. So yeah, take what we're both saying to heart, and utilize it in terms of whether you want to play the long or the short side. But right now, from what I'm observing, there are some low-risk entry points, and of course that's been key. The volume dry-ups in some of these names is very nice when you see them, because then getting into the position might only cost you a percent or two on the downside. And actually, to mention, I was going to mention also JD. That's another Chinese name that bounced off its 20-day exponential moving average 4 days ago, and it's just it's an overall uptrend. But the last few weeks, the market averages haven't really done much of anything, and I think that goes for a lot of stocks as well, not just Chinese names. I mean, we haven't really had meaningful moves in either direction. So it's been kind of a stagnant market, and I guess the question is, does the general market move higher or lower from here? I mean, is this the beginning of a greater correction, or is the market actually consolidating so it can move higher? And again, the answer is, watch your stocks, watch your price volume action, because they will tell you everything you need to know. At this point, I think it can go either way, but I like that because it's very illustrative of staying fluid. Another stock is SQ, actually. That was one that had a viable gap up on earnings. This one's been on our list, and it's had a pullback. The volume's getting quiet in here. It hasn't done anything like, NetEase. These stocks gap up, they haven't done anything, but then the general markets haven't really done anything in the last few weeks. So, again, I would just watch for, again, the key is buying a position where your risk is minimal. Right now, SQ poses a little bit more risk than I'd be comfortable with. Maybe if it gets down to its 20, which coincides with the low of its gap-up day, that would be an excellent entry point, because then you can manage your risk to less than 2%. And as we saw with some stocks like JD, well, there's a number of these things, but JD, which I just mentioned 4 days ago, it bounced off its 20-day, and so now it's about, what is that? It went up about 10% from there. Now it's up several percent. So, you've got some cushion now. So you've got psychological advantage there. Let's see. Mention a couple other names, or actually no, just V. That was the last one I wanted to talk about. That one, had that wild ride of a day after it reported earnings. And it finished to the upside, then it consolidated, and now it looks like it's wanting to go higher. So at any rate, as far as the overall tone of the market, it's very instructive. And keep a journal, on your notes, because on your thinking, and also on your stocks, because you can go back to what you thought. Maybe review it once a month or once every quarter, and it can be very instructive in terms of your own development as a trader. And with that, Gil and I can talk about some other stuff from here on.
Yeah, I also wanted to make the point that we're not right now on the focus list. We're not adding names. We're names are falling off. So we're seeing names like Thor Industries blowing up. Box came out with earnings, and that kind of has come apart. That looks like a short now. It's below the 50-day moving average. This one actually still got a great story, but this looks like a sell, or that at least needs to base. X is definitely off the list now. Like it's violating, well, not violating it, but it's moving below the 50-day moving average again, and it's tried to break out twice and failed. If you look at all these infrastructure stocks, they've all turned into shorts. VMC is another one. Eagle Materials is another one. And all I see, Dr. K, in my screens is stuff coming off, and names that looked good previously are starting to break. The oils, of course, they've been getting hit for a while, but they really have come apart more recently as the price of oil has broken down. So what I'm seeing in terms of what the stocks are telling me is the deterioration under the hood of the market in terms of individual stocks. There are some holding up, and I guess if the market does find a bottom and turns, then that's definitely where you want to watch for entries like VABA. If this holds up, I mean, I give it a 40% chance of holding up. I don't like this base. So it looks wedgy along the lows on the handle. So, and the other thing is these other names like Weibo getting into trouble. I definitely watch Netties if it busts this low here or the 20-day line, but it looks like it could. So, and it could fill the gap, I guess, and go down to the 50-day line and still be okay, but the Bible gap up would be off the table. But it has had a pretty long run, along with, let's look at Momo on a weekly chart. That's had a pretty decent run too. It broke out, had one base, and now it's gapped up, but that's kind of been negated. What other names have come off? JD, I think, is a sell, but you could use the 10-day or the 20-day line as your selling guide if that's what you wanted to do. I'm trying to remember what else we got.
Yeah, I think that the situation with a lot of, there's certainly the number of names we've been adding is slowed considerably. I mean, we had a nice burst earlier on, and we've got some names that are not holding up. So this could be again a tipping point between the markets heading lower. In other words, these stocks are tipping us off that things aren't that great under the hood, or it could also be the market finding a floor and moving higher, which we've seen a number of times when leading stocks start to deteriorate. That's why I find this crossroads interesting, because I think there's a lot of bullish and bearish arguments that hold equal weight. You can use stock examples to underscore either side. So you're kind of getting you're getting the more of the bullish view from me and the bearish view from Gil, but neither of us, I would not call myself bullish at all. I wouldn't call myself bearish either.
But I would definitely say that the bearish evidence is starting to propagate here. So
Right,
that's
and
what
that
makes
if
me
it
cautious.
continues, then it's an interesting tipping point because it doesn't have to increase much for things to get
No.
worse quickly. But at the same time, if we start to see some good action to the upside, then of course that's great for the bulls.
Right, but you'd also want to see some rotation, I think, into other areas of the market. And right now everything seems to be somewhat stagnant. I can't really identify any groups per se that are suddenly displaying strength. There's, I guess, some of the semiconductors like Cavium's, has broken out, but I'm always wary of buying a breakout. You got some of these trying to act pretty well. Broadcom, this one, Skyworks Solutions, been acting okay, but some of these are in positions where they could pull back. But again, these have already been going. So in terms of rotation into new areas, the market seems a little bit strange. So to me, I would say at the very least, I'm not going to be aggressive on the long side here. I don't really see anything that warrants that, and everything to me seems obvious, so I like to operate more. So for example, instead of buying a NetEase, on the Bible gap up, I'd rather be buying it down here at the 50-day line, along with Momo, which had pocket pivots, roundabout pocket pivots down in the base, and Weibo also, and that would have been much better on Weibo because you could have sold into the breakout ahead of earnings and avoided all this. Now this thing is a short. Some other shorts, Tesla was a hot name, and this looks like a short now using the 50-day line above you as a selling guide, or not a selling guide, but a guide for an upside stop on the short side. But this looks like, do you guys see a fractal pattern here? Anybody see a fractal pattern? There's a fractal head and shoulders here. Whoops, I don't want to make them fatter. I want to make them... You guys see this, right? Come on, is anybody awake out there? Let me... So here you go, left shoulder, head, and you got the big break down the right side. It occurs on heavy volume and a little right shoulder. Now this is going to be interesting to see how this plays out, because I think you're in a decent short zone here using the 50-day line as your guide for an upside stop. If the stock bumped up into the 50-day, which is at what? What is this thing at, like 247 or something, 248, somewhere in there, that might make it very exciting. So something to keep an eye on here. But that's one that's on our short sale list. What else do we have on our short sale list, RK?
1 second, I'm just...
Never mind. NVIDIA's one. And this one, okay, it's a late-stage failed base, so you have a climactic sort of top here on the left side, then a double top, so that's basically just your standard issue double top in Technical Analysis 101, and you failed here, and the stock actually became shortable on the failure. One rally into the 20-day line here, so right in here in the 10-day and 20-day, then you gap down to lower lows, you undercut that low, and you rally back up. Now you're kind of sputtering on along the lows. And I've been working this thing on the short side in all the rallies, so you most recently have a rally up into the 10-day here on Wednesday, I think that was, yeah, and again this morning, and now maybe it's going to break to the downside. So you got to watch for that one, and I think that's definitely a playable short sale target. See, and that's another thing about this market, is we haven't had any short sale targets for a long time that have really worked out at all. So if these are starting to work, I think, and if you start to see that again, and I think like another example would be, let me clean all this off here. You know, X to me, this stock, I shorted it this morning before the open, like 36.65. They had it up, jacked up before the opening, and so I shorted it. Now it's busting the 50-day line and has blown below yesterday's low, and looks like it wants to go lower. But again, here's a name that was acting really well earlier, and it was basing and looking like it was going to break out, and then it fakes everyone out and it blows up. Kaboom. And that's that. And you have the same thing going on with Steel Dynamics. And these were names that were on our on the focus list. So these are more names on the list that have come off and deteriorated. AKS or AK Steel, it's another one. That one failed here. And it had started to have a pocket pivot down here. Looked like it might turn, but that failed immediately. One rally to the 20-day line, and you roll over. So that looks pretty grim. And I know, what were some of the other steel? ATI was one. That was a viable gap up sort of move, but it never went anywhere. And then it holding up constructively. At least it looked like it to me at the time. And then that thing just blew apart, and it's come off pretty hard. So, and these are names that were on our focus list. So, and I don't think we've added anything recently, because there really isn't anything to add. So, and I think, you know, a correction would be a good thing to see, and you see what sort of stuff arises from the ashes, so to speak, in terms of rotation into new groups that could be moving. But it's hard to come up with a thematic, a really compelling theme or thematic play or plays or group or whatever in the market right now. So that's what makes it difficult. Anyways, some questions here. Let's see, someone's asking about this one. What about it? I wouldn't be buying it. It looks like a big pod-like thing, but it's going up for a while, so I'm not a buyer. How about you, Dr. K? You a buyer of this one?
No, that's just, this one in general has been pretty sloppy. I mean, you can see it just violates the 50-day routinely, and it's just it's a sloppy pattern in general. So I'd avoid it.
Alchemy, someone's asking about that one. I'm not buying this one either. That's the pattern. It's just a big pod-like structure, and it's failing on a breakout attempt, so I don't think I'd want to buy it. But are you talking about shorting it? Maybe. I don't know. Biotechs are tough to play either way, because they can jam up or down, you know. One stock I've liked since early January was Clovis, and that had a weird breakout stalled, pulled back to the top of the breakout, and then took off. This one may be starting to roll over now. And there are several of these that are in positions along with Glycos, where they've had a run now. Now they're going to correct and build a base. And yeah, they're probably not going to blow up unless you see the market blow up, but probably time to take a rest because these things have had some pretty good moves. And we put this thing on really early right here, down at around 36, and it's had a great move since then. If you go, what is that from 36 to the peak above 52? What is that? That's 14 point, no, 60.
40 to 50%.
Yeah, that's a great move, And in this market, it's like, thank you very much, I'll take it. Don't get too enamored with a name that you're going to have the potential that you had with some of these names back in the 90s, because it's not that simple. Let's see, what else do we have on the short watches? I know we got some other stuff there that at least that we've been watching. So Netflix, I put Netflix. Netflix looks like it's basing again, properly, but again, it's a buyable gap up that's gone nowhere. And this is what it looks like. It's way up here. So, I guess it's holding the 10-week line, but I definitely watch this thing for some kind of failure. And it seems like lately, you got some news thing the other day and it had a pocket pivot, but that's again one of these news things, and you never want to buy this thing on strength. And the volume's kind of drying up here as it runs up into the 10 and the 20 day. So I bumped a little short on this one as well this morning when it was up and near 142, and it's come off a little bit since then. So we'll see if it starts to blow up or anything. But I think the Nvidia is probably heading lower, probably to 70. What are some other? Let me see. Cat. Well, Cat, we also talked about that as a short a couple of weeks ago. So I'm sorry, Dr. K, what did you say?
Oh, yeah, there's been a bunch. I mean, Splunk and Berry and.
Yeah, Cat is one, and that you can see this broke hard, and then he had a little rally above the 50-day that went up to the 20-day line, and actually could have been shorted there if you're watching it. So if you're a short seller, we've had some names on our watch list, and it's a very small watch list, but that makes shorting very convenient and easy because you have a small group of stocks you can focus on. And the reality is, over the last few days, or the last week or so since we put them on or discussed them, they have gone lower. So somebody's saying I'm short CSX. Is there anything that I'm missing that would make this a good short? I was looking at it the other day, and it looked like a short here on the reversal. So it's way up there, and that looks to me, it's very wedgy on the weekly chart. You can see that light volume rally, and now it's broken below the 20-day line. This is one I would look at coming after on the short side. So I've been working, if you're going to pick on an industrial, I like Cat has been a good play the last few days. John Deere is related, and maybe that's about to break apart too. So I notice Nvidia is now up a dime, so it's turning red. And I am short that one as well from the bump into the 10-day line this morning. Okay, more questions on this CSX. Let me get back to this. But, if the market comes in, then the trannies are going to come in, and probably this would come down to the 50-day line. So as a tactical short, it could work definitely, and it's something bigger than that if the market gets into more of a correction, definitely. When setting alarm, what? I'll get to that one. But an undercut would be take you under these lows, Paul, or Chris, rather. And so you'd look for an undercut of this low, which is 46.10 here, 46.39, so 46.10, but that may probably coincide with a move down to the 50-day line. So that would make sense for a downside target of about 8, 9, 10%. Let's see. Somebody is asking about alarm. What significance would we give to the what? The spike? Oh, the spike reversal in November. I don't know. This isn't a stock I really care for. I think it's a piece of crap. So it trades 188,000 shares a day. So nobody's really playing this thing. And you get these big volume reversals off the highs, and that doesn't look so good. So I don't like it. Do you place some significance, measurable significance on this, Dr. K? This reversal over here? Yeah, I do. It means it sucks. So I don't, other than that, I'm not sure how to describe it.
Obviously, gap downs and this kind of high volume outside reversal action is a negative in the pattern.
there you have it. So, I mean, I think that's kind of obvious, but I don't know. Is this going to take off and run now? I don't know. Maybe it does. You know, if you think so, then you could always buy it and use the top of this base here at 30 or so as your stop. So the Dow's up 32, so it's just slopping around, but that's kind of what the indexers are doing here. They're just slopping around, and I think a lot of the action is just kind of phony. And meanwhile, I find that the best plays have been on the short side, so that's kind of what's just got me got my focus right now, as opposed to trying to buy stocks thinking that we're going to have some glorious new rally here. Here's another one now. You see a fractal head and shoulders here, anybody? This is like, you look at some of the clouds and they all sort of look the same. Here's a left shoulder ahead. And again, the right side of the fractal head is very similar to a regular head on a weekly chart, where you have the heavy volume along the right side is indicating weakness and forms the right side of the head. Then you get resistance here at the 20-day line, and I shorted that one there this morning as well, and it's starting to come in. So, yeah, so the feedback right now is positive in terms of the short side, but you definitely have to, you know, time it correctly. If you come in too early on some of these, they'll just squeeze you. So for example, if you came into now yesterday at the 10-day line, you break to the 50-day line. To me, that would be a short-term cover point, and then I'd watch and see what it does from there. I actually was short it yesterday. I covered at the 50-day line, and then it bounces in the 20-day line. So you it's kind of like a couple of 3% either way, and you're really looking for a break to the 200-day line as a nice profitable move that you're looking for, but it doesn't mean you have to get it. But the best way to get positioned for it, I think, is being patient, looking for the 20-day line or the rally into the 20-day line. I would say that would go. What I'm doing right now is focusing on this group. So you have Splunk, which looked like it might hold up because you did pull in here. You got support on the first day down after earnings because you closed just under mid-range on heavy volume. So it looked like supporting action at the 20-day line. And it rallied up, and it was actually looking pretty strong in early, what would this be, the first day of March, and then it's rolled over. Once it broke the 20-day line, in my view, it turns into a short now, because you have this sort of base failure thing inside of a big pod. So it's a big pod with a long handle, and you know, so that becomes short there. But notice that yesterday it bounced off the 10-week line, and so I was short this one also off the 20-day line. So I see it hit the 10-week line. The other thing is I figured they would sell the market off yesterday around midday, and this is kind of a day trading strategy, and then you get a gap up after the jobs number, because I figured the jobs number would be pretty strong, which it was, at least as the government measures it. And you could sort of tell because the ADP employment number on, I think it was on Tuesday or Wednesday, was actually pretty strong. So you knew you're going to get a strong number. But I'm wondering if that isn't more a function of expectations, because businesses start hiring because they think they're going to have some favorable policies coming down the pipeline, and so you get a bump. You sort of get a expectations bump in the data, and I guess we'll find out over the next couple of months whether that's real or not, or sustainable.
Yeah, I think a lot of businesses have they've been retaining their employees. I think it's the slowest. One of the slowest periods of employees being let go since, I forget, someone might have, I read it today in the news about, I mean, in a long time. So I think businesses are gearing up toward a better economy.
Yeah, and that's their expectation right now. So I think that some of that may depend on whether Trump can get some of his regulatory reform through and tax reform and whatnot. I don't know about this healthcare thing. It seems like a very sticky thing, and there's a lot of back and forth on that. So, but anyways, somebody says, would you see MASI as a climactic run? Would you? I don't know. Is that climactic? Usually, what is the old definition of a climax top? Like 7 out of 8 days up in a row, and the biggest point move at the very end or something. Kind of like what Momo did, a little bit, but not quite. But I don't think any of these rules really matter anymore. So it's just way up there.
But I mean, the rules that worked in the 80s and 90s that I designed, they stopped working after the dot-com crash, and you just don't get these sustainable moves that you saw in plenty in the 1990s. And in other words, today's rule of a climax top is more of an intermediate call like we've seen in some of these names recently. So you get a big burst to the upside, and that's your climax top. You don't know if it's going to be a final top, but you figure it's going to be at least an intermediate top, so you want to take your profits. And that, of course, goes in sync with our advice on taking profits when the price gets ahead of itself. I mean, Momo was a classic example, and as we wrote, 3 days ago, it was sticking straight up. Granted, it was after earnings and everything, but it was up 14% in one day. So you either sell at the close, take your profits, or you sell the next day. I mean, I'm the type of person, I like to hold out if I can to the very end of the climax move. So if in this kind of situation, you just sell the next day. Okay, it's gapped down on you. It gapped actually near was it close to the high of the day, which is 33. So it's gapping down what, 3% or something. You just take your money off the table, and then of course it moves a whole lot lower and reverses all of the gains from the prior day. So don't argue with these things. Take your profits.
Yeah, probably with this, if you own it from down further, use the 10-day line, I guess, as your selling guide, so that would work. If you're thinking you're going to short it because it's a climax move, it doesn't really look climaxy to me, so it looks like somebody just keeps buying it. Are they being bought out or something? Somebody knows something here. Let's see. NVIDIA's up 7 cents now. You know what I thought was interesting, Dr. Case? Tony Robbins wrote a book on investing. So I hear the other day that the bull market has turned 8 years old, and here comes Tony Robbins, who actually, he came into the office at O'Neill once and met with Bill and I, and he was trying to get Bill to talk at one of his weekend workshops, I guess, that he charges $3,000 or $4,000 for. And Bill actually did go and do it once, but I think after that he didn't like the whole scene in terms of the hypiness and all the bullshit. So but he's writing a book now on investing. Okay, and I heard him on TV talking about it, and he's using a lot of the same old bromides. Like, if you missed the 10 biggest up days over the last 20 years, your returns would have diminished by such and such. If you own an iPhone, you're stupid if you don't own Apple stock. And it's like, okay, well, I'm glad I didn't do that back with Nokia when I owned a Nokia phone, because Nokia went from like what did that thing go to, from like 100 to 5? So, there's just a lot of these bromides that brokers have been using to sell people on stocks for eons, okay? And anybody who's been a brokerage client, at least the old guard, I'm not talking about you asset-based managers who I think are running a more honest model, but, back in the old days, the pitch for buying stocks was pretty standard. This market always goes up, and they'd show you the Ibbotson chart. Anybody remember the Ibbotson chart? Went straight up. But I think it's kind of weird, Dr. K, that we get Tony Robbins now. And I remember this guy, the thing that struck me about him, now I know he's huge, he's really big, but his teeth, they look like they were made out of this really white, these white concrete blocks. They were so freaking big, even in relation to him. And that's the one thing that struck me about them, and how extremely white they were. And I'm thinking, those are either some weird kind of veneers or something, but yeah, that just, like, I couldn't help looking at his big teeth the whole time. So anyways, but he wasn't paying too much attention to me. He was more interested in talking to Bill. I was just there with Bill because he said to me, hey, I got a meeting with Tony Robbins. You want to come in and sit in? So I, sure, I'll check it out, whatever. And then I can at least brag that I met Tony Robbins. Woohoo. Anyways, somebody says, hi, Gil. What? Go ahead. You had something to add, Dr. K?
Not really much. I mean, the guy has certainly helped a lot of people.
Yeah,
I mean, in I don't know what it was, 1990 or something. Right around the time I was reading Bill's book, How to Make Money in Stocks. I read that in 1989, and it did put me on track. I mean, it was Awaken the Giant Within. It was a really good book. Gotta tell you, it was very helpful. And I know that he's advised presidents. He advises Fortune 500 companies. So there must be some method to his madness in terms of what he's doing now. I don't follow him, but I do know that his advice, sometimes, it's what you need to hear to get things straight, in your head. Because sometimes the most obvious things elude us. So maybe, and he's really good at marketing himself, and obviously, I think the teeth thing, he obviously wants to keep looking as good as he can, but maybe he overdoes it, because then it starts to look a bit fake. But yeah, I think it's interesting and telling that he's finally come out with a book on investing 8 years into the bull market. He's not an investor. I mean, what he does really well is not investing. So I would be very cautious. And then you just pointed out that he's got these meaningless bromides that are actually really bad advice, because if you follow them in the next cycle, you're liable to lose money, because a lot of those bromides don't hold up over time. But I don't think I think his intention is good, but I don't think he knows enough about investing to really dispense advice that is useful to the public.
Yeah, that was my thinking. So I was just thinking maybe it's a sign of a top. You know, it's one of those things you'll look back at and say, oh, that was a top. Tony Robbins came out with a book. So anyways, let's get... somebody says that Tony Robbins held an investment seminar in March of 2000 right at the peak. That makes sense. I know Harry Dent right about the same time was telling everybody that we're going to go to Dow 30,000 or 25,000, I think it was, and that was the top. So anyways, they're trying. You know, we're all trying, I guess. Somebody says, I have two questions regarding undercut setups. One, is there a particular volume signature that you look for? No. Is there a time frame parameter used? Let it undercut and then move above in 1 to 2 days. If it comes back above the prior low, I'll buy it. But you got to remember the other thing is the whole undercut and rally thing started out as a short covering technique. So like yesterday I was short FANG, nice short on Tuesday, and it broke down, and I came in short the stock, and it undercut this low. So boom, I'm going to cover it. If it undercuts this low, it's going to go through the 200-day line, but I covered it yesterday right near the opening. It was maybe down a buck or two at the most, I think, and then it rallies back up. Now I'm going to re-short it. So that whole rule started out as a a short covering rule, not a buy setup. But then I started noticing when I was rereading one of Wyckoff's, or charting the market with Wyckoff technique or something like that. I got to remember. I have that book somewhere around here. I realized that's also a Wyckoфfian spring. So I would call it an undercut and rally, but it's a Wyckoфfian spring. And then I realized that in this market, when we see things looking really ugly, that things will generally turn around. And so you're not buying breakouts, because if you're buying breakouts, you're getting whipped out and losing money. And the way the market is, the best time to buy is when it's weak and the ugly duckling shows up. And so I noticed that a lot of stocks, I'd cover them after they undercut and rally, and then I'd try to short them again, but they'd keep going. And then I realized in this market, this is turning into a buy setup. And so when the market's looking ugly and I start to see some undercuts of major lows in stocks that were on my long watch list previously and that were leaders that have since corrected, I'll look at buying them in those positions. And you know, that has worked in several cases, but I would say the one flaw in my method has been that I don't capitalize on the moves, or I haven't as much as possible, or as much as appears possible in hindsight, okay, because you're always investing in real time. There goes NVIDIA down 15 cents. Anyways, and so that's how that all occurred. So, you know, to me, it's not so much that I'm looking for a certain volume or for the moon to be in the 7th house and Jupiter to be aligned with Mars. If the stock looks like it has, if it's undercutting a low and it gets back above that low, I'll jump on the stock long. Sometimes I'll be short and I'll flip long and use that same low. So in this case, once it turned back above this low here, which is 98.80, then I would buy it as close to that as possible and maybe give it 0.5% to the downside, or maybe 1, depending on the stock and how volatile it is, and see what happens. And then if it rallies up, some of them I'd end up selling them up at resistance, and they would keep going. So, you know, even further. So even if they got past, say, the 20-day and got to the 50-day, they just keep going. So that's when I realized that was a long setup, and it would work in a lot of cases. But when you have the market in a position like this, where the indexes are mostly somewhat extended to the upside, and you're starting to see breakdowns in more groups and more leading stocks or areas that were leading the market at the end of last year and earlier this year, then I think you have to take a different view of them based on the context within which they're occurring, the overall market context. So you have to think about that too. So all of this is less about trying to come up with some anal retentive formula for handling an undercut and rally, and then trying to use more of your judgment and sort of figuring things out and putting the puzzle pieces together. You know, yesterday somebody was asking me how do you cover? Well, yesterday I figured that you would get a sell-off midday, because my thinking is the market's under some sort of distribution, and it could be rotational distribution, but they're selling off certain names, and we'll see what they buy, if anything, in their place. And so my thinking is that you're in a little bit of distribution here, so they'll use the jobs number to sell into. But first what they'll do is sell on Thursday. You'll get some selling. So they took the index down. The Dow was, what, 60, 70, I think it slows, and it looked pretty ugly. But I noticed at that time a number of my shorts like Now and Splunk and Fang were all coming under areas where I want to cover them. And also my theory was that we're going to gap up the next morning, this morning, which we did. Do I want to be short? No, I'm just going to go back to cash. I actually went long a couple of names and picked off, small rallies this morning at the opening. At the same time, I was shorting X, and let's see, what's going on here? Now we got Nvidia down. Okay, still coming down. So so within that context, I already had a trading plan for covering my shorts, and I just got out of the way. It just happened to be when they got down to their moving average. So for example, with Now, I'm hitting this one off the 20-day or the 10-day line the day before, and it comes down to the 50-day line. And my thinking is, okay, I know I'm going to be covering my shorts before the end of the day because I'm looking for a gap up the next day. And so obviously when I see it at the 50-day, that's as good a spot as any. So if I see Fang undercutting a prior low, that's as good as any. So I'm also putting it together with my trading plan and where I think the market's at. So I think the market's coming down, and my screening work, my research, which is honest work, shows me that the short side seems to be expanding a little bit. And the fact that we've added some names or put out reports on names where we haven't been for a while is telling you that we are at least going into what I would call a bifurcated market, where you might have some things that work on the long side, but you're also going to get some mileage out of the short side as well. And that's not atypical for this market over the last several years. So anyways.
Yeah, I mean, I think you all remember the piece about using the focus list as a market barometer. So, this is true, and this has always been true. In the 90s, it was true. So when the number of stocks on the list expands, that's a good bullish sign. It's not guaranteed, but of course, it's a good metric. And when the names start to come off, then obviously there's something going on that's not so good. But the tricky part of the markets, the way they've been the last couple of years, has been that when things start to look really bad, that's often when markets find a floor. So it's a lot trickier in terms of finding that window, where you can definitively say, okay, it looks like we're going into correction. Those days are gone. I don't know, markets always change, so perhaps we'll get back to that at some point. But right now, I mean, certainly for the last couple of years, that has not been the case. So you have to really be more in the moment than ever before, rather than trying to make predictions, because many times they will, when things, like I said, look really bad, they will find their lows and start moving higher. And
yeah, and that's when you want to look for the undercut and rally setups. When things start looking really bad and it looks like everything's just going to blow to smithereens, that's when I'll start looking at my older lists of long ideas to see what might be in an undercut and rally position. So, so it's all contextual, right? I mean, and I don't think either one of us tries to make any predictions. We just go with what we're seeing, depending on what it is we're trying to achieve. So all that is to say, there's no formula for handling an undercut and rally. If it undercuts prior low and turns back above it, there's your buy signal. There doesn't have to be any volume signature. There doesn't have to be, the moon doesn't have to be in the 7th house, and Jupiter does not have to be aligned with Mars. However, Mercury may have to be in retrograde, but I haven't figured that one out with my detailed research. So anyways, I was noticing Nettie's, I'm talking about this, I noticed it's moving lower. But you can see you had a 620 sell earlier. When would this have occurred? There's pretty much right at the market opening. So you can see my charts have the action, the after hours, and the pre-market opening or pre-open trading action on them. So I can see what's going on. And I guess right at the opening, you had a break and then a bounce, and then you had the 620 sell signal, so that could have been shorted there at like 290, let's be realistic and say, well, you could have got it off at 290, 291, somewhere 290, between 290.50 and 291. Yeah, that's pretty tight. And now you're going breaking to the downside. So, and again, this thing's had a long run, so keep an eye on this. This will be telling. So there's some things to keep an eye on here that may also help you figure out what this market's about to do or what it's starting to do. Now NVIDIA's back up 13 cents. Not a big deal. Goldman said, yeah, the other thing, another area I'd watch for that's been leading this market are the financials. And this morning I noticed some of these starting to break, and Goldman Sachs is one of them. But also you can pretty much pick any bank. They all look similar. JP Morgan. Bank of America has been a hot name, actually broke out here. And they had a little bit of a move there, 10%, not quite, but but I would keep a real close eye on the financials because they have been the leading area of the market. And I think that a lot of this rally in the indexes has been driven primarily by, at least lately, by the financials continuing to go higher. Because it sure as heck hasn't been the materials names and the infrastructure names that all went nuts on the upside after Trump was elected. You can see here's Argan. This is another one we took off, but this doesn't trade enough volume. It trades 184,000 shares, which is peanuts, so I'm not going to short it, but that's breaking down. And I already showed you the VMC, and it sure as heck hasn't been the oils or even the oil related. Here's Silicon, a big outside reversal off the peak, and then it runs into the 10-day line on the bear flag. Could have been shorted there, and then it just broke on when the oil prices were breaking. But hasn't oil been coming off for a while? Yeah, it started to roll over. Well, I don't know. It's starting to look kind of funky earlier, but if you look at oil on a weekly chart, it never really has had a big move. It's just been in this sort of bearish consolidation. So, I don't know. Anyways.
Yeah, same that goes for the whole CRB index. It's been drifting sideways, and then it came off along the way. It correlates pretty well with oil.
Here's gold and silver. And those things blew up pretty quickly. So much for the smooth trend. So, any other questions? Does anybody have any brilliancies? Let's look at some of these other clouds. I'm looking at work because I was talking about now. Workday's kind of in a bearish flag, but if a rally to the 20-day might bring it into short range. But again, there's a big pod. See the pod right there? Everybody see it? Raise your hand if you can see it. Oh, but I can't see you. Oh well. Text that you've raised your hand. So there's your pod, and you failed, and you have a big outside reversal and heavy volume. And that's a short. But the key is, if you're trying to optimize your entry, I guess you could wait for a breach of the 50-day and 200-day, or you could wait for a rally up to the 20-day if you got it. But so far, that's not happening. What's now up to? Down 46 cents, so it's reversed. And again, this is another one. This is a bigger pot, and it broke out of this cup with handle where the handle was wedging, and so now it could fail. So, I mean, I think it already is failing because it broke through the 20-day line. And again, it's a fractal head and shoulders formation. So, I'm going through some of them, Scotty. So, let's see. Juniper. It looks like it could be failing here. I'm actually short that one at the 10-day line. That's coming in a little bit. It's a little bit slow, but that's okay because if this starts to get really bad, it'll break to the 200-day line, and I'll get some juice out of it there. Otherwise, it's kind of slow. So if you at the beginning of what might be a correction, you never know if the market's going to fake you out or not. So I like to pick on names that are relatively liquid. So that's why I'm short Netflix, NVIDIA. Juniper is one of them. Now is fairly liquid. Splunk. Again, I talked about this one. This could be shortable here. Maybe the low here, which is 61.01, that would be your stop. Either that or the 20-day line, which is 61.53. It's like 2% away, so that's pretty minimal. But again, this is a name that could be a late-stage breakout. It's like Workday, sort of. Late-stage breakout failure, so you have a reversal on the weekly chart there. So it could, that could be coming apart. But I'd watch the whole group, and then last but not least, watch the leader and the one that's holding up, which looks a little suspicious to me right here. And let me check something here because I've been watching this all day, and now that I brought it up, yeah, I got a trade here. So give me a sec. See, I should have been hitting that at 83.62. That's what I get for doing these webinars. Sorry, everyone. I lose my focus on what I should be doing, which is trading. But I guess I hope everyone finds these helpful. That would make it worth it, I suppose. But oh well, what's 20 cents anyways, right? If it's really going to break, this thing's heading lower. But I've been watching this. It's sort of pod-like. You're up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row. You're stalling a little bit at the peak, and so I think 84 is will be my stop on a short here on this one. And I've just put it out at 83.44, so we'll see what happens. Murphy's Law says it'll probably rally $1 before it rolls over, so anyways. So that's one, and it would be, if you're starting to see more of these clouds come apart, Splunk, Workday, now, we already seen data as another cloud sort of name, and that one was a short. I don't know if I talked about this when it broke the 20-day line, but that's now just toast. And that's sort of a low base breakout failure, or not even a breakout, it's just a piece of garbage. It's a Bible gap up that just did not happen. Yeah, see, CRM now is rallying a few cents. Murphy's Law says it will rally back to 83.65, where I should have shorted it earlier if I was watching. The leverage ETF question. Here's one for you, Dr. K. The triple short version of Q versus the regular short version of Q. What? I don't know. What do you have anything to say about that? I don't, because I don't use ETFs, so I don't really care.
Three times the risk. And so,
What's yeah, I mean, you're getting 3 times the leverage, so it's like shorting 3 times the amount of Qs if you short the. Is that right? What is it? Q?
Yeah, it's a TQQQ. It's a triple. And just as we always say, know your risk tolerance levels so you can position size appropriately, whether you're going to do QQQ or TQQQ.
Yeah, I mean, there's really no difference other than the fact that it's just an equivalent amount of the Qs. So,
I mean, you can look at the charts, the daily charts, and you can see that they correlate extremely well. It's just one's 3 times the other.
All right. Anyways, and I'm not the guy to ask on the ETF stuff. I don't know anything about ETFs. I mean, it seems like every time I try to buy some of this UVXY, I just end up getting stopped out. So I'll just stick to what I know, which is stocks. Now watch, the UVXY will go up 10 points today. Maybe I'll buy a little bit here just for fun. Let's see. Do you have a recommended amount of UVXY to buy, Dr. K, if I don't want to lose too much money, but I want to make a lot?
Are you serious? Are you making that up?
I'm just joking around. I'm being facetious. So. No, sometimes you get questions like that. It's like, will the VIX model, am I guaranteed to make up my 20% losses? Oh yeah, everything's guaranteed, just like an annuity. Anyways, now we're turning red. See, Dow's down 10 bucks. This whole thing's going to turn red. Nasdaq's up 3. And I only have $13,000 left in buying power, which means I'm tapped out. Anyways, market's message, beware the Ides of March. That if you're a poet, I guess that sounds pretty good. So, okay, I want to go through some more names. Let's see. Here's one we have on our short list that I think is a short here, using the 20-day line, which is Berry. This is a material stock. So you can even see, if you look really carefully, you may have to squint a little bit, but you see a fractal head and shoulders here. And again, the right side of the head is here. And what do we see associated with that? We see a spike in selling volume. So the fractal patterns, go back and read Short Selling with the O'Neill Disciples, and you will see the discussion on fractals. So. And I really like the term fractal, Dr. K, but the whole time I was calling them miniature head and shoulders until you started talking about fractal patterns in the market, and I said, wait a minute, that's what it is. So I do give Dr. K credit for that at the beginning of the book, so just so you all know. But that aptly describes, I think, what you see in these patterns, these miniature head and shoulders. But that's what the berry is looking like, and we figured, this along with the other materials and infrastructure names, and that they may come off. Now, since this is in plastics and this is chemicals, I'd watch this for a failure. I wouldn't be buying this thing up here. Not at all. You see the pattern? It's had a huge move. I know it's a viable gap, and you could have made some money in it, but I would have just sold into that because you get a nice move. You get, $4, you get close to 13% or so, I think it is. But now it looks like it could fail. So Dow's down 15. This is going to get some velocity. So maybe this UVXY just bought at work. I don't know. Any other questions before we sign off? I'm trying to think what else is there around here. Oh, I wanted to go back to Juniper Networks, and I don't know, this thing blew up on earnings, but it's got to head lower because the group is telling you something is not quite right. Santa came out with earnings yesterday, and they blew up, so there's the big blow up. And it was looking fine. Look how constructive it looked just for earnings. So earnings have a way of doing that. Finisar is another one that was, trekking up. Wait a minute, what happened here? No. I'm being dyslexic here. There we go. There's a nice shortable gap down. Anybody do that one? And if you own this stock and you're still in it, Scotty, you want to. I think you want to get the hell out. But what do I know? It can only go down to 16. That's all. But in any case, I think if you're watching these optical stocks, here's light. This could be okay. This has had a big run, and it's sitting on top of the base. Watch for a failure, and it seems to be doing that here. Now the big leader has been this one, which is just you had a gap up and then some pocket pivots move higher, but that's gone parabolic. Probably if you own this one, I'm wondering if there's anybody out there own this one. I think you just take your profits and let it set up again. Someone's asking Zion. Well, Zion is like, I should have probably brought that up because that's just another bank to me. I mean, they all look the same. It's starting to fail. I wouldn't own it. I would get rid of it. It's because it's not doing anything. And if you bought it down here, at least you're up a little bit. Why sit around and wait for things to get worse? Because it looks like they're going to, but we'll see. I don't know. It's market.
It undercut the low of its gap up. So
yeah,
you get 1 or 2% ferocity, but you'd be out. And then now it's a bit late because it's moved through its 10 and 20 day.
Yeah, so the signs are already there. So remember that nobody's going to blow a whistle and tell you when to get it. You kind of got to figure it out if it just doesn't look right. I mean, my general selling rule is if the stock looks at me funny, I just sell it. Sometimes that doesn't work out so well, but most of the time it does. And in this case, these were not going anywhere. Same thing with Netflix. I was playing with that on the long side, but I thought once it had this pocket pivot back in early February, and that just went nowhere. I was thinking if this is going to go, that's when it's going to go off the viable gap up, if that really has any thrust. Now we're down 21 on the Dow, so. But to me, it looks like it's failing, and I almost see a fractal head and shoulders here as well. So. You got to be careful though, because you start seeing them everywhere if you're not, discriminating about them. But I see that because you have the right side of the head here off of a peak, and that shows a spike in volume. And then you have this pocket pivot here, which stalls, and then the stock rolls over. So you can tell that move, which I think came on news, was sold into. So now you can see the Dow is down 11. See, so it looks like it's going to come apart and come unglued, and then it just kind of lifts suddenly. So, but just to mess with everybody's head, I think. Let's see. Any other questions? Oh, Mobileye. I think Mobileye, I'm actually short that. I've been shorting it above 47 the last few days, and I cover. And then it goes back up above the next day. And that one I'd watch out for. Because I think this whole self-driving car thing is probably not as big, at least in the near term, as people say it is. So I definitely think it's something for the future. But I think this thing is showing some selling up around the 48 level. So the last few days you can see how it's stalled out and the volume is up but still below average. So it could fail, but so far it's not an outright failure, but it's a little bit pod-like, moving straight sideways on the sort of a cup with handle. So, but I would use the 48 level as a stop here if you're going to try and short it. It's a kind of a different short, but so far every time I've shorted it up around 47.40 or so, it's just come right back in. So. And you can look at the right now. If you look at the 620 chart, it already had a sell signal at 47.20, and you had a bump up, and then you could have been shorted. So now it's starting to roll over, and I bet you it turns red not too long. Go ahead, Dr. K. You had something?
Yeah, the technology is quite interesting. They rolled out some autonomous vehicles in Mountain View, California. So it's just getting going, and it's proven out, and all the lab tests, extensive lab tests, and real-time driving have shown that the accident rate is considerably less than human beings driving the cars. So I think it'll get traction faster than we think. Like a lot of these exponential technologies are showing up right now.
Right, and they're competitors of Mobileye. So, and what I really meant by saying that, because no, I don't. I think the self-driving car thing is definitely real, and it works. But the idea that it's going to be uniquely profitable for Mobileye with all these other competitors like NVIDIA who have better technology, and also the technology is constantly changing. That's always the thing with tech stocks, right? You've got the hot chip company one year, next year there's another company making a hotter chip. So that all they can be superseded by newer technology, especially when it's advancing so rapidly like the way driverless cars are. So they could be pushed out. So I think again, watch this one. I think a breach of the 20-day line is negative for the stock and probably means you're getting a sort of a pod-like, whoops, where's my, yeah, pod-like failure, because that is a pod. And you have see how you have a rapid 1, 2, 3, 4, 5, 6, 7, 8, 9-week run up the right side, and that sort of thing, isn't it? That's like Tesla. And I was sort of thinking maybe the two were related because it has had the similar type of run on the weekly chart up the right side of its pattern as Tesla. So I'm wondering if maybe the two patterns have been related. So let's look at this again. Here's Tesla, and you see the big move, and now here's Mobileye. And whoops, it's not such a big move, but it's over the same time period. So I wonder if they're correlated. With Tesla breaking down, maybe that means Mobileye breaks down too. So I kind of trying to put the two together. So I almost look at Mobileye as maybe a proxy short, for Tesla, since I can't ever borrow the shares. We have that on our short sale watch list. So anyways, that's basically all I've got for now. Dow's up 1, now it's down 1. We'll see what happens, but it looks like it wants to roll back. So, lay back, let it roll back. We see that there are some short sale targets. What I would do is you want to pick 5 to 10 really good ones and stay focused on those because you don't want to start spreading yourself too thin. If you can find group themes like I have with the cloud names, that some of them you have Workday, Splunk, and now are breaking down from potential pod type patterns or late stage base failures, which could also drag down Salesforce, CRM. And then, of course, the oils have been a great group theme. And I think if CAT is busting, look at other names like Deere and whatever else you can find in those areas as potential short sale plays. So that's how I would approach it. And I'd stick to a small number of names. I'm only dealing with probably 10, maybe 15 at the most, but I want to keep it to a small group, and I watch them really closely. And right now, all of the names on my short sale watch list are showing me signs that show continued weakening. So that's why I think they're going lower. So that's why I'm short them rather than being long anything here. So anyways, got anything else, Dr. K?
No, I think we're good here.
All right.
It's just stay nimble and stay fluid. And
yeah,
that's
exactly.
what market's dictated to us over the last few years, and more so now than, well, right now, as in we're at a kind of crossroads as to whether the market's going to go higher or lower from here.
Yeah, and also just keep an open mind and listen to what the market's telling you rather than what you think it should tell you, because I stopped operating on that basis 4 years ago, and it's changed my returns considerably. Anyways, that's all we've got. You guys, will catch you next time. Thanks for showing up. Have a great weekend. Take care.
So long, everyone.